I know, Lisa, look how nice you look, and Tim all spiffy.
I just put a jacket on.
Can you share, like, what are some red flags that that an adjuster might identify, say, on an auto claim? What would they be looking for that might identify that there's potential fraud?
Yeah, so the indicators kind of change up when you're dealing with personal lines and then commercial lines. There's also a difference between a staged accident and what we call an intentional caused accident. So staging is literally, if you think about it, it's a setup. It's a setup from the perspective that it may not have even really occurred. So, you have to look and see what the arrangement is. So like in personal lines, sometimes you could see two parties that are in different vehicles. They know each other. Is there potential that they orchestrated this? They'll either take older vehicles that are, salvage vehicles and try to rebuild them or say they're rebuilt. And the damages are really consistent from the prior loss and why the vehicle was a salvage. The other scenarios you have is where they actually do get hit. And that's where you see, all the different scenarios where they kind of cut in front and you're hitting the back of them. The positive is, and I have to say, this is where you really want to have, for our policyholders that do have businesses, having dash cams are extremely important in these scenarios, especially in your major metro areas. Having that dash cam ability is great for us because it's allowing us to see exactly, not only from a liability perspective, but also in a fraud scenario, were they set up? And so I think that they need to know that does exist out there. And there's different types of schemes. It's very some of it's very specific to the region of what we see and it's also the way of the layout. New York is set up differently than how it would look down in somewhere like in Florida, let's say. So those are all the things that we would want to be aware of. But dash cams, so any type of footage like that is very helpful in the process of investigations, and not only just fraud investigations, but liability investigations. I do think that that's something that the policyholders probably should know that is helpful. And if they do have it, that's great. But in the auto side of it is really the injury perspective and having these bodily injury claims and how that can really affect cost overall, because that's where you start getting into exaggerated injuries or faked injuries that never occurred. Were they jump-ins? That's the other thing to know too. So sometimes the commercial vehicle, whether they impact or not, parties in the other vehicle may not even have actually been in the car. So that's what we call a jump in. There's a lot of different scenarios that happen, but those are mostly the most common ones that we would see in auto.
I was thinking from a comp perspective, there's quite a few red flags that the adjuster needs to be aware of. Things like a Monday morning accident, right? Somebody that maybe is really involved in sports coming back in on Monday morning alleging some type of injury. Doesn't mean that there's been fraud committed, but it's certainly something worth exploring. If there's pending layoffs, so when people know that their paycheck might be affected, they're looking for other means to keep that paycheck coming. So layoff, performance issues where they may be fearful of being terminated, inconsistencies in how the accident happened. They may tell their supervisor it happened one way, tell the doctor something else, so that it goes from a small incident to something that's bigger. Maybe a short-term employee, somebody who's only been employed a couple of days.
I want to make this abundantly clear is that these indicators are no way in shape or form by themselves an indicator that we're not going to pay a claim. We look at the totality of the entire claim and the circumstances that are surrounding the loss to determine, the investigations that we need to do. And with that stated, we look at the entire claim. We never try to flag something on a single indicator or something of that sort and mark it as fraud. We take a holistic view of it to be fair to all parties involved so that, we're paying what we owe and we're following the process. So I just wanted to interject with that.
I think that's a great point, Tim, because I think that what we hear a lot of time from customers is they recognize a red flag, right? And the first thing we hear is this is a fraudulent claim. But a red flag is just that it's something that warrants additional investigation, which is the examiner's job. And then if that investigation indicates that it is questionable, that's when we get Jennifer and her team involved. They're the experts in actually determining fraud. The claims team simply raises the flag and says, I think there's something off here. You guys really check it out. And I think that's a good distinction, that the examiner is never going to determine there's fraud. They simply conduct the investigation to pass on to the experts. Maybe you can kind of explain what ISO is. What is that?
So Verisk ISO Claim Search is the ability for an adjuster and examiner to have the ability to search for claims activity. It's focusing on prior claims activity and then the current claim. So the current claims is reported. Now, I will say that an insurance company does have to be part of this product. Now, this product has been around for years and years and years, and I've been, utilizing it for years. And the reason why it's so important is that it provides that data for us to get a better idea of somebody that, do you have a habitual person who is continuously doing things that are surrounding different types of insurance fraud? So what you can see and identify is that, do you have a pattern of somebody that is strictly just doing auto-related matters, so just bodily injury type stuff, or are you actually seeing somebody that is truly going into homeowners and work comp and auto, and are you seeing thefts? Are you seeing, so you're getting a better picture of somebody's history. Now, where it does get, like I said, data, once again, so you've got multitude of companies that are providing that information on that claims history. So the data can be different. And so when we're looking for how to do extraction of that information, there can be anomalies in data. So that obviously is a challenge within my world. And we want to make sure, but with that tool alone, it helps in that identification. And then having the NICB piece, it also provides that ability to kind of have a further awareness that there was some type of potential for prior SIU involvement. It also provides us that ability to know that there is some type of potential for they were either prior prosecutions for insurance fraud, which we will see that because cases have been opened involving where NICB was helping in the coordination with that with either the state or the federal level. So we will have all of that information to assist as well within the ISO inquiries. So ISO is a very important tool within the insurance world, but for SIU specifically, it really allows us to get a better view of what we're seeing. Not everything is fraud. So even if you're seeing the indicator, that doesn't mean that it is. And I will say for myself, in all my years, there are things where you initially get it sent over for referral from the adjuster or examiner, and you're looking at it and you're automatically thinking something's not right, and we have to do our due diligence. And it's part of the SIU to do that. And in doing those steps, you have to rule in or rule out, and you need to lift every rock, and you need to peel the onion, because what's happening is that you then find out in some instances, as crazy as some of the stories can be or the inconsistencies that are found, it actually ends up being true and it is meritorious. And then on other things where you truly have a staged situation, everything is orchestrated. So things look as if they are real. And as we're starting to get into more and more technology is great when it's in great hands. But when it gets into the bad hands, that's where we start to really have problems. And so different things are being manipulated and it's getting more difficult. And that is one of the things that is an opportunity for us in the SIU world to make sure that we're able to identify that. And it's not always the human eye that can identify it. So we want to make sure that we here at Berkeley are incorporating that technology to get that so that we've got that awareness. That's going to be and is a key piece to this as we move through, because 5 years ago, our technology, it didn't look like this. We're seeing even more and more manipulation of documents and all kinds of things, photos, videos, things. I mean, everyone knows, as if they listen to the news, there's a lot of things going on from a technology perspective with just AI. And what does that look like when someone is trying to commit fraud? And how does that get identified? So the ISO information, the NICB information, and then all these additional tools, are pieces of how this is all going to be identified. Also, at the end of the day, I don't want to take away the fact that we really, truly do need our claims personnel to be aware and have their own spidey sense, because they're the ones that are, they're talking to the parties that are involved in the losses. It may be an attorney that's involved as well. So we want to get that information so that the examiner is aware that there's something that doesn't seem right. And it's that human nature that this is just not clicking. So that plays a very big piece in this as well. It's not just the technology that's identifying this. You still need to have the human component as well.
Yeah, and I just wanted to add on to that as well, as far as I want to touch upon workers' comp. We talk about technology and algorithms to try to identify patterns and so forth of fraud, but there's really nothing like boots on the ground, the old habit of doing investigations. And there is a workers' comp law in New York State, Section 114A, that essentially states that if a recipient of benefits makes a false statement, that the benefits can be cut off. In some circumstances, too, we can basically be reimbursed for what we've paid. And that recipient can also be cut off from future benefits for lifetime. Typically, and we've had success stories here, and we have hired investigators to actually go out and do surveillance, because obviously in the workers' comp forum, you have to have the recipient of benefits go before the workers' comp board, testify as to their limitations and so forth. And if they testify that they're limited in certain activities, there's potential that they're not, or if they're working somewhere and they state that they're not working, and there's some, again, red flags that may indicate otherwise, we have to, of course, spend investigative dollars to verify this information. And in some cases, we're able to identify these recipient of benefits that have not been truthful in their testimony, where they do have another job, or they state that they can't lift and bend or pick up something, but yet you see them gardening, or you're working at a second job and they're lifting heavy equipment or something of that. And we then present this information to the workers' compensation law judge. And in order to build a case, it can't be just a single piece of information. It has to be like a whole panorama of information to present to so that the workers' compensation judge can say, okay, there's no doubt that this person isn't being truthful here. And, we're going to find that they've violated 114A and cut off their benefits. So we have had some success stories where we have essentially caught people in lies, saying that they cannot do certain things, but we have found that they can. We have had success at the workers' comp board where they have cut off their benefits. They have enabled us to go after and recover the benefits that we have paid, and that's what we do. We have judgments, or we're pursuing judgments against these individuals to recover the benefits that have been paid. Because once there's fraud, we're going to pursue it to the nth degree and try to get our money back, because it's very important to send a message to the industry as a whole that we're looking at this very carefully. If we do have a case of fraud, that we're not going to sweep it under the rug, that we're going to get the fullest extent of our compensation. Also, we will refer it to the New York State Attorney General or whatever authority there is to see if there's a criminal component that they can pursue. Certainly, they pick and choose which cases that they want to go forward with. But those are the type of efforts that we are exercising. And then the other thing is, we know that a workers' comp mod is very important to contractors so that they can get business, because if their mod falls below a certain degree or a certain number, they're not able to get maybe public work projects or some type of jobs. So we take that to heart with our insureds, and we know how important that mod is. So we try to do everything we can to only pay what we owe. And, these are the efforts that we're exercising going forward.